Hello folks, I'm L.A. Little and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective, each time asking ourselves what happened today and what might it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. Last night we were looking at these markets. We were looking at what was a pretty nasty drop. I said last night, and actually said Monday that we were going to try to crawl out of that hole. We did try to crawl out Tuesday, dropped right back down. Well, yesterday we gap up, we start to see the selling come in, and then all of a sudden what we talked about last night took place, and that is that the Fed gave us some sort of a signal that the markets really shouldn't be worrying about the Fed. Dudley comes out and says that they probably doesn't look as compelling in terms of raising rates in September as it did, and all of a sudden the snapper rally took off. NDX 5% higher, 203 points. Snapper indeed. Bite your hand off. Russell was up a couple percent. The S&Ps themselves up 4%. You had a huge rally across the board. You had big sell-off in all the commodities, the bonds, and all that. I mean, this looks very familiar, doesn't it? Come out of this, go into those. Come out of these, go into that. It's back and forth, back and forth. Big rally. Dollar was up as well. And even oil climbed today. Doesn't mean much for oil, but it did climb. So, big snapback rally. You're going to see, headlines about, oh, it's the biggest rally we've seen in 4 years, or whatever the statistics are. The thing I would leave you with, or the thought I would leave you with here about that, and I see this all the time. I've talked about it elsewhere, but I'm going to talk about it one more time real quick, and that is that when you see a push down and another push down, an extension down, and it just keeps going. And in this case, from on the S&P, for example, you lost, 12, 13%, top to bottom. I don't know, maybe it's 14%. And then all of a sudden you get a 4% rally or 5% rally, and they talk about, hey, it's the biggest rally we've seen, in whatever, however many years. It doesn't matter. If you were part of this, it doesn't matter. You're still down 10%. Right? And even when you go up 4%, you're not really capturing 4% of what you lost because you got less to base it on now. The percentages, look larger on the way back up. Don't get sucked into this ideal that you always have to be in the market to catch these, big 4% gains, right? Because almost all those 4% gains come after 10% losses. It's the way it works. Right? They stretch, and then they snap back. But if you lost all the way down, it really doesn't matter, does it? Let's look at the charts. S&P. Okay, so here's the big rally up, right? Yesterday it was actually interesting. Came within 7 cents of making a new low, but it didn't make one. So you left volume at the bottom. And you did this on all the indexes with the exception of the Russell. So you got a volume still hanging down here, but it was a pretty close test. So, you could kind of say, okay, it was close enough, right? And so it pushes back up after that. Question is where it's going to go. We'll talk about that a little bit later, but you got a nice snapback rally. This rally back today was essentially a takeaway bar. It wasn't quite on this, but it was on most of them. And we'll see that as we go through these. And what I mean by takeaway bar, you can see it cleanly here on the NASDAQ. The entire bar from yesterday was taken away. So all the badness that was in it yesterday is gone today. And if you take away the other way, it's the opposite, right? So example, I don't know where an example is, but you get the idea. So you get a takeaway bar. Does that have huge significance? No, other than the fact that it tells you what the mood of the buyers and sellers were today. That's why you look at them. That's why you notice them. So you get a takeaway bar. The more important thing is that you're back over the range bar's high. 46.94.90 was the high. You close at 46.97, so you're over it. That says, hey, I can push this thing up. NASDAQ, NDX. NDX is going to look about the same. got a takeaway bar as well, and you're way over that bar. So the NDX definitely telling you is going to try to trade higher. Now the Russell was the one that actually gave us the signal again for today, and that is it went under last night. Actually didn't give us a signal. It was the one giving us a negative signal last night. It went under last night and stayed under. Well, today it gets back under and actually leaves more volume than yesterday. But what it didn't do is it didn't have more volume than the Monday breakdown. So essentially you tested both days. You overall had less volume. You flip around, you do a hammer reversal. This thing's going to spring right back up and push up again. If you look inside the sectors, some of those sectors that we were talking about yesterday, they got wiped out, made us think that the market was worried about the Fed. Here's the real estate. Gets a little bounce today, nothing huge, but a bounce. Some of those fears being allayed. Same thing on the ITB. I think we saw the same thing on the utilities. Let's see what that one looks like. So essentially, some of those, big fears. This one does an under-over 2-bar reversal. That one's going to work higher. All those fears that we saw, some of that is being removed as a result of today's trades. If we look at some of the others like XLV, XLY, right, they all held, they're all sitting there, they're all poised to get over their range bars. That's going to be the test tomorrow. And again, we'll talk about what that tomorrow trade and the next few days trade probably looks like. Remember, you got Jackson Hole this weekend. And at Jackson Hole is where the Fed and all the central bankers, get invited to, both domestically and overseas. They're going to be gathering. They do this. It's kind of a ritual. I think the Kansas City Fed is the one that hosts it. It's up in Jackson Hole, and they're going to be talking about what they're doing. And one of the speakers is of course one of the Fed governors, and he's basically the mouthpiece at that gathering for the Fed. And the expectation is that they're going to say we're not going to raise rates. And if that's what they say, then that's going to meet the expectations, and that of course is going to help continue the rally if it happens. Now, market's not going to wait for that. They're going to discount it, and that's what you started to see today, and I expect you're going to see in front of the Fed meetings. You're going to see some more of that, which will play into what we talk about here in the latter part of the show. As far as overseas, we were talking last night that there were some bounces taking place, and let's pull those up and look at them. The one I did notice, I forgot to mention last night, I will mention it right off the bat here, is India. My good friends in India, I've told them that the trade that they were waiting on, we talked about this, we talked about this multiple times now, that you were waiting for this to come back into this area, right? And sure enough, it comes all the way back into it. And if you look at it here on the weekly, you can see it's going to have more volume. So if you're looking at that and you're trading neoclassically, right, you're going to look at this and you're going to say, oh, wait, this thing's coming in here and it's got more volume. I don't know that I want to buy that, right? Well, in neoclassical, we teach that you have to look at all 3 time frames. Matter of fact, all these charts that you see me pulling up, they pop up on your screens and you see all 3 of them at the same time. And if you go back on India, the breakouts here, right, that never has been retested over that breakout. So in other words, we've got a clean breakout more than 6 bars. If it ever came back here, it'd be a heck of a buy. But that buy, if it shows up, right, is not going to be anytime soon, most likely, right? You're only about halfway back to it at this point, not even quite that far. The buy is really the buy that we were just pointing out on the weekly is this bar. It's the May bar of this year. The top of that bar is 25,375. This pullback brings it back inside that bar. That's the test. We're at the end of the month. Volumes not even close on the comparison. It looks to me like this is the buy. So if you're in India, if you're looking at your markets and you're trying to decide is this it, looks to me like this is probably the buy, and it probably was the buy today if you had the opportunity. Looking at the rest of these, if we look at like France and Germany, look at Europe. So you got France up at the top of that bar, fails again. It's also at that swing point low. So, this is the test point. This is where you learn what the market really wants to do, because, this is the natural place that you're going to see the buyers, shy off, and you're going to see the sellers show up. If you get over this, then what do? You change more than likely you change the direction of the trend from down to sideways near term on this time frame. It doesn't actually, it's kind of a precursor to the more likely scenario of what's going to happen in terms of trend. It doesn't change trend, it just tells you that trend probably is going to change, and that test is the breakdown area, and in this case it goes up to here. It looks to me like the way this sit, it's going to try to test a full retest regen, which is usually typical if you're within 6 bars. That probably comes tomorrow or Friday, and that will be the real test. And you got the same sort of a test, not only here in the CACs, you got the same sort of a test that's going to take place in the DAX, and that is if it can get itself up to the swing point low, that would be the test there. Now, DAX being weaker is going to have a harder time reaching there, which is going to allow the CACs to get up to the top of its area as this one tries to pull up and do its test. So both of those look like they want to try to trade higher. The worry has been, all the press you see has been about China and Hong Kong, mainly China. Hong Kong couldn't lift. They're gonna bounce tonight though. They have a little bottom taking place here already. The real test is going to be Shanghai because there's nothing there to suggest it. It did do a little doji last night, which could be some sort of a short-term bottom, but this is going to have problems when it bounces, which kind of leads me back to what's going to happen next. And when I come back, I'll talk about that.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as I come back here, the idea is to finish the show with some sort of a wrap. I give you some idea of where things are, where they're going. The last 2 days I've been telling you it's probably going to try to bounce, and it did both days. Today it actually held it. Yesterday it gave it all up by the end of the day. We already know, looking at the NASDAQ chart, the NDX chart, and even the Russell chart, that we're probably going to continue this bounce. And if you ask yourself, where can it go to? I mean, we're talking huge points here. I mean, today's swing was, what is it, about 1870 up to 1940, 70 points on the S&P 500. I mean, when it usually does, 12, maybe 15 a day. So you're talking huge, 5-fold type expansions in volatility and range. And it would be not very hard to get back up here to this gap area. And that's where I suspect it's going to try to get to tomorrow. So that gap area is top of the bar, right? It's top of the range bar. This is the big daddy of them, right? The S&P. So, if I'm looking at them and I'm saying how far can it go, I suspect that's where it's going to try to trade to tomorrow. Now, when it gets there, I wouldn't be surprised to see some sort of a pullback. So in other words, we have an A to B structure forming. Wherever that ends, that's going to be the A to B. Let's say that we get it to there, we come back to these tops potentially, right? And that becomes our C point, and then you get to the A, B, C, D, right? The bullish structure on up. And where does that take you? Well, it takes you right back to the retest regen zone, which is exactly where it should go. So in other words, you'd be coming back into this area. And let me scoot that over because it's really off of this bar, right? It's this bar that we're looking at. And it comes back to that area, this bar. That was the bar that was broken on the way down. And so a push back up should come back to that area and try to retest off that breakdown. That's the ideal. That's what the trade is. That's why it's called retest regen. It's bearish because you broke down. So you break under it, you come down, you work your way back up, and then that's where the rubber meets the road. In other words, that's where you either fail or you succeed, right? It tells you whether you're really going to go down more or whether you're really just some huge range that's built out. that is how this thing could form. That's kind of how I expect it to form. And I do expect it to try to work its way back up here to test. How long does it take? Well, it could take another week or two for that to happen, if in fact it does happen. Look at your calendar. This is the end of August. Fed meets third week of September. What would that be? Well, that would be, if it worked out this way, that would be pushing you right up into the retest regen bearish at the time the Fed was going to tell you what it was going to do. That doesn't sound like a buy the news to me. That sounds like a sell the news. And if it's set up that way, it probably would be a sell. So the ideal tomorrow is probably a further push, get into this gap area, maybe close it. Maybe you get a little pullback on Friday. Maybe even enough of a pullback to set up the B2C structure, and then maybe the Fed over the weekend gives you some good news and it starts climbing back up. However it lays out in terms of timing, that seems to be the structure it's trying to put in place. And if we do get some follow through tomorrow, which I expect, right, then you're going to be setting up the case where people are starting to think to themselves, wow, I think I'm missing a boat again, right? Train's leaving the station. I'm more fearful of losing out on gains than to losing real money. And the greed will be replaced by fear. The fear will be replaced by greed. It's the other way around. So that may be what's about to set up. My ideal here is, though, that, let's call it a day at a time. Look for the bounce up into this gap area tomorrow. Thanks for joining me as always. Tell a friend, tell two, share it with somebody. I'm LA. This is, and it was, your daily NeoTA wrap. Have a great one. See you next time. Good night.